afternoon. Let's start our floor show. Joining me now is SlateStone Wealth Chief Market Strategist Kenny Polcari and Horizon Portfolio Management Head Zachary Hill. And we're pushing session lows right now, guys, in particular. Look at the markets. Kenny Polcari, first to you, your reaction to what you're seeing. We've got some serious volatility going on right now, not just in the session, but over the last several sessions.
Part of what happened, after Warsh came out and gave that speech, to your point, he wasn't going to get painted into a corner. He wasn't going to tell people exactly what he thought. He wasn't going to promise anybody that rates were going to do X or Y in September, whatever the next move was. He's letting the market kind of adjust. And actually, I think that's why you're seeing more nervousness in the market over the last half an hour, ever since he stopped talking, because the market doesn't know, right? You and I have had this conversation. We spent 20 years of the Fed holding everybody's hand, telling them exactly what they thought and what was going to happen and when they were going to raise and when they were going to cut. And Kevin Warsh says, I'm going back to a Greenspan Fed where the market's going to do the work. And I think that's exactly what you're seeing, that the market now is selling off harder because it didn't get what it wants. They're stamping their feet, and now they're going to prove to him that he needs to come out and start promising. And I think that's below.
It's interesting that you say Alan Greenspan and you bring that up, because that era for the Federal Reserve, now 20 years ago, was a time where the markets did have to work a lot harder to understand. And so he was so adamant. I thought it was so interesting, Zachary, that he wants to make sure that the market is the story. He's not the story. But I want to pivot to earnings growth with you and these numbers, because one of the things that you point out in your research note is that the median company that beats earnings is actually lower the next day. You talk about that high bar, because so far the numbers have been very strong. Maybe not for P&G this morning, but in general, we've had, the banking sector look solid. Are we over-interpreting and are we a little over-enthusiastic about earnings so far?
Well, I think it's a little bit of a reflection of the starting place. So, outside of the tech universe, you got the average S&P 500 company as of yesterday was at all-time highs. And so, a lot of the focus has been in the semi space and the 10% correction in the NASDAQ. But from a lot of names, they've really been performing very, very well. And, to Kenny's point, there's certainly a lot of uncertainty. I mean, that press conference just sounded a whole lot different than what we've heard out of central bankers for the last 15 years. And so market participants are going to have to adjust to this. But really, as I take a step back from an equity perspective, I think what we see, from the hyperscalers after the bell today and tomorrow are way more important than what we heard from Chair Warsh just a few minutes ago.
Kenny, I showed the semis. I want to bring that group up again because that rotation continues. You've had your eye on this ball for quite some time, and this is where we have seen the story, and it's not been a good story. Fair enough on the semis, but do you think that this is kind of an overblown sell-off right now in this sector?
I think it's starting to get, look, the sector itself is down about 28 or 29% broadly, the semis, the NASDAQ, which is well into bear market territory. The NASDAQ's just kissing down 10%, which is kind of correction territory. But I think some of these names are getting to that point where they're overdone, right? You're seeing like individual capitulation on names, some names down more than 40% in the space, which makes it a little bit head scratching, right? Trying to figure out, okay, I think it's a little bit of an overreaction, but I think you're going to get, after today, you're going to get more nervousness, and the algos scratch the headlines and they try to interpret what he said or what he didn't say, and their first reaction is hit the sell button. And then we'll come back and, shoot first and ask questions later. And that's kind of, I think, what you're seeing. But I think at some point, a lot of these names are going to suddenly pop up as value names because they're way overdone, in my opinion.
Yeah. Zachary, real quick before you go. I mean, again, going back to this decision and the market reaction, which has been, pretty volatile. I think that trying to have to figure out where the Fed is going to go, not having that lead time and that lead information coming from the committee, this is going to be a big adjustment for the market in general, for investors in general.
Yeah, I mean, I would totally agree with you. I mean, the good news, at least from the tech space and the semi space, as Kenny was just mentioning, we've already done a lot of that adjustment. So the market does tend to test, new Fed shares. I mean, the thing that we're going to be watching in the next couple of weeks, and we've just seen this reaction today, right? But we did get a pretty serious steepening in the interest rate curve, and that's a clear sign that the markets want a hike. And so we get a lot of data, two CPI reports and 2 jobs reports over the next 2 months before the Fed meets again. So it's going to be really important to see how those come out and what the rest of the committee says, when they start to hit the tapes to help shape where policy is going to go in the next couple months.
We've got claims tomorrow at 8:30 a.m. Eastern Time. We've got the PC price index, income and spending, the first read of second quarter GDP. Kenny, real quick before you go, all of this data dump could be a real telling story. All this with the backdrop of what we're seeing with the Iran-U.S. war that is not going well right now.
For sure. And I think it becomes more important, specifically after the Federal Reserve press conference today, because he's depending on the data and the market to interpret it. And by the way, the chance of a September rate hike is now 58%. It was 70% this morning. So that actually came down in the last 3 hours. It was down from 70 to 58%. So I'm really curious whether or not the market's demanding a rate hike or just the market itself is going to do that work and he can leave rates right where they are. It's going to be very interesting to see how this plays out.
Well, and to the soundbite we played earlier about the 10-year, maybe the yields are going to be the story, not necessarily the action from the Feds. But he said multiple times, 2% is the target. Make no mistake. Well, okay, you're going to have to get there at some point, aren't you? I don't know. All right, Kenny Polcari, Zachary Hill. It was not boring today. That is for sure. Thanks for being with me, both you guys. Appreciate it.
Bye-bye.